Morning everybody, it's Chris here from Student Education with the 4 Majors Analysis Update for the 7th of July 2011. Just going to be looking at the 4 Majors this morning using our CTC strategy template. I've got the year in front of me. Let's have a look at the charts. Okay, we know we're in an extended uptrend. Price is dictating that and the major trend is up. However, you can see that we've had lower highs going into this intermediate trend, and recently we had a doji followed by 2 consecutive days of bearish sentiment to the downside, a lot of momentum to the downside, and now what's happening is we've seen price, the Asian market session opening, low end of the wick, not much trading to the upside, and we're going to Thursday. There's a lot of news out today. We also have to start with, we have 11 o'clock this morning, we have the German industrial production month-to-month figures. We have the all-important at 1:45 this afternoon GMT. We have the minimum bid rate. So we have interest rates. It looks like there might be an increase. Well, they're forecasting an increase from 1.25% up to 1.50. It'll remain to see if that's exactly the case. To try and the whole issue with euro at the moment now. It'll be interesting. That's going to be the main one. We've also got at 12 o'clock this afternoon the news out in sterling. There's talk that Mr. Merv King is not going to change interest rates there again for the official bank rate. So a lot of news out today. There's also there's an ECB press conference at 1:30 GMT this afternoon. So the euro is probably going to be quite consolidative today. I presume as we head towards this range, we might see a bit of movement. But if we could see price finding support at this level here, then we could see a potential upside movement. A failure to find support here and another further day of selling could take us roughly to the prior support, quite strong one that we've seen over the past month or so, is here just short of the 1800 mark. So the major trend is the first one in play. We're looking at roughly the 14,300 mark for this pair. This will probably be on as we speak. Prior resistance and support. Oops, if I could draw a straight line, it'd be brilliant. That tool doesn't work at all. But you can see where price is trading now and relative to where it's been in the past. A lot of resistance and support at this level here, and we're consolidating. So if we're seeing any ranges today, we're going to find it's going to be quite jumpy, hesitant, because today we have a lot. We have the minimum, we have the bid rates this afternoon, and tomorrow we have non-farm payroll. So very important what happens, especially with those two pieces of information. Next up is sterling against US dollar. I've got the daily chart in front of me. Here again, as I mentioned, we've got some heavy news out today. We've got interest rates. There's talk going around that Merv King will keep interest rates at 0.5%. It'll be interesting to see if that's the case. You can see that the major trend recently has been breached, and we've had a reattempt which failed, and we've now trading to the downside. A lot of wick formations at one point on the underside of this strong support level here that we've seen over the past month or so, and a failure to break higher has seen the CTC go red, and we are now trading in a negative downtrend. Notice that the trend at the moment now is quite steep, this pull off, and if I look at projections from the initial starts of this move, 100% at here the 1590 wasn't reached, but it was close enough, and that'll be our first port of call for this pair, followed by the 161.8 and ultimately the 261.8 down the bottom, which would be the prior strong support or swing area for this pair. So as it stands now, looking for further shorting opportunities for this pair. The CTC is in our favor for further negativity in the market. It'll be interesting to see what Merv King does this afternoon in terms of the official bank rate. Between now and then, we have manufacturing products month to month. We're expecting a positive result for that. For the previous figure was negative 0.1.5%. We're expecting a forecast of 1.1%. So that's quite a huge jump. If it comes out higher than the previous, then great. If it comes out lower than the forecast, I suppose we'll still see a bit of momentum on that. We've also got 12 noon, the assets purchase facility, which is unchanged at 200 billion. Then we've got the official bank rates also at noon GMT. The previous figure was 0.5% and they're expecting 0.50%. So no change there. Also got tentative rate statements throughout the day. That's going to take place. So a lot of news out today, guys. We could see a bit of volatility in the market for these pairs intraday. So be aware of it. Heads up. Rather, I would probably stand aside. Nicky and I will probably be standing aside from trading over the next couple of days because there's lots of volatility that's likely to occur in the markets while these news events are posted. The US dollar Swiss franc is the next one up. We know that Swiss franc is a negative trend, has been a negative trend since June of last year. And what's happened recently is we've seen price break a major support area, find resistance, and reattempted resistance on a number of occasions. Just recently, early July, we saw an attempt, a failure, and all that came out of it was an evening star formation and a resistance level, the major resistance trend line, as well as the ceiling level for the prior support area. And now we've seen this evening star formation where we've seen updrive, indecision, downdrive, and we've closed off yesterday on an indecision candle, a spinning top of some sort, and then the Asian market going into the European session has opened and there's been no momentum whatsoever in that. So very indecisive. And with all the news coming out, we have the unemployment claims this afternoon. We've also got the CPI results month on month that have just been announced, and they are negative. The previous figure was 0.00%. The forecast was -1, and it's come out even lower, so at 0.2. So Chief losing ground there on the CPI results. That's obviously going to be the case with services purchased consumers, and that's obviously going to hit hard. Later on this afternoon, we have those all-important figures, the ADP non-farm employment change for the US. They're expecting a higher figure. The previous figure was 38,000. They're expecting 67,000. So that's quite a huge change there. It's almost double. And then we have the unemployment claims later at 1:30 p.m. GMT, where the previous figure was 428,000. They're expecting 421. So they're expecting unemployment claims of less. If that's the case, then we're going to see some movement likewise. So hesitation going into today's range to this market. As it stands at the moment now, we are hesitating. Resistance level here, the CTC is in our favor, bar that we don't have the red arrow. We have red candles now. This consolidation range is still in place. We've had some support and resistance in this area here. We are consolidating in a box formation. You want to see a break of this box. Trading higher than the box would obviously see price trading above a very strong major downtrend. Trading below it would obviously confirm further downside movement, and we should be looking for further shorting opportunities. Next up is the US dollar Japanese yen pair. We've seen price consolidating above the 80 mark. We know that overall this trend is negative. We're in the consolidation range over the past since September of last year. So it's almost going on a full year. We 3 or 4 months short of a full year. It's just been consolidating in this range to the downside. Notice the highs are getting lower. The institution moving average is above, and the CTC is primarily negative. Bar a couple blue bars and hesitation, especially this one that's happened here in early April. This was the intervention that we saw on the yen pair, which didn't kind of stack up, and we saw price revert to the downside. This intervention was after we had this huge spike to the downside. The Japanese government got involved, as well as the G7 countries, to try and stem this negativity that the US dollar was feeling against its yen counterpart. And that didn't stack up. We were expecting a bounce here. We had 2 days of hesitation, and we were thinking, well, it's going to bounce, and that failed to materialize, and we saw price reverting to the downside, and our CTC gave us an all-time sell signal, and we've been in this sell signal range or consolidation range since then. So early April right through to today's, we've seen price reverting or channeling as such. But after testing the 80 period moving average on a number of occasions, which happens to be a strong support level for this pair, we've seen price reverting to the upside and forming higher swings, which dictates a higher trend but it's come unstuck at the first hurdle, the first resistance level, and you can see price is now being squeezed between 2 points. The CTC is half bullish in terms of the arrow candles, but the main CTC bands are still negatives, confirming that we're still in a negative trend. And until such time as we're trading above this negative trend, ideally above the 8200 or more, then we're going to see the CTC remain undecided. So squeeze at the moment now. We have a lot of news out today and tomorrow on non-farm payroll. These will probably factor in what price is likely to do on this pair. So until such time as we've seen a clear indication of what price is likely to do, then we are biding our time and waiting for that news to break. Otherwise, we're just still in a very much consolidation range. Ideally, if we want to see further upside movement to at least the 8150, which happens to be the major trend to the downside, we do need to see a break and close higher than the previous this resistance level. Here it opened at 8110. And if we to see further downside movement, then we want to see a break of this uptrend. So trading a bearish engulfing pattern, which takes us lower than the prior swing. So the close here at 80.77 or lower would definitely give us further indication of further downside movement. That's for today, guys. Be aware there's a lot of news out the next following 2 days. We have very important news out on euro today, bid rates. We also have the interest rates for the British market. And then we have the unemployment figures later this afternoon for the ADP non-farm payroll figures out for the US just before the non-farm payroll figures for tomorrow. So a lot of news out today, which is going to see a lot of skittishness in the volatility in the markets. So if you're not in a trade, I would suggest not to trade until Monday, until we get a definite clear signal as what's occurring on the market. That's it for today. Hope you have a fantastic trading day. If you are following the rules of the CTC, please make sure you do follow them. Please ensure that you have great money management to back it up. And most importantly, enjoy your trading. Keep it simple, I always say. And most importantly, trade serenely.